What's happening, beautiful people? You hear that music in the background? We got a little Rolling Stones Exile on Main Street happening. It's the theme of our trade today. Straza, what's happening?
You're having some fun today, right?
I'm having some fun, man. Look, we put on our big boy boomer pants today, and we're rocking out old school style. And it's kind of it plays into the theme of the trade we put on. You and I and JC were talking this morning about trades we like, and this name that came up on the latest minor leaguers report. It's a name, frankly, I had never heard of. Maybe that's my bad, but it's just a name that was totally under the radar.
Oh,
We're talking about a company called Main Street Capital, ticker MAIN. Straza, tell me what you're seeing in that name. Let's bring up the chart here. Let's show people what we're talking about. But tell me what you're seeing in this name.
it's ironic name, right? Main Street Capital, like we'd have heard of it, but it's only a $3 billion small investment firm, asset manager. From what I understand, they do things in the real estate, industry, commercial and residential real estate. They pay a really juicy yield, almost 6%. They pay it out every month.
Right,
They
monthly. It's crazy.
And then they pay a special at the end of the year. Most years, it seems. They've already declared one for next month. So, breaking out to new all-time highs. And I really like the option setup. I won't steal your thunder, but
Well, forgive me if you said what they do, but this is a real estate company, right? Don't they manage a bunch of properties? Is that their bag?
yeah, that's it.
I mean, it's just crazy that I've never heard of it, and the fact that they're paying. I mean, look, we don't care about dividends as traders. We're just looking for tactical moves in the stock. But it's nice to know when you're thinking about putting on a longer term position that a company that is not only trending your way and not only making a new all time high, but also pays a juicy dividend. I mean, that's great to know. That's like a little extra layer of comfort, so to speak.
Right. And it fits a couple other themes that we like right now, whether it's, seeing breakouts down the cap scale. This is a mid cap stock. It's also a financial name. We're seeing a lot of small and mid cap financials do well. You could look at the ETF PSCF, that's small cap financials. Community banks is QABA. All time highs. This is at all time highs. So it's a leader. It's a lot to like.
Right. It's got a lot of wind in its sails, so to speak. So I mean, it's a position we like, and so we started talking about, okay, well, how do we trade this thing? And we were looking at the options this morning, and a couple things that are, I don't want to call them red flags, but a couple things that were concerning to me, and two of the facts are that the stock itself doesn't have a whole lot of trading volume on a regular day. I mean, let me pull it up here on my machine here, on my side here. I mean, it brings up average volume of, I don't know, 250,000 shares, which is not nothing, but it's also not a crazy amount of volume. And then, of course, that translates into the options market. There's not a whole lot of volume there. There's not a whole lot of open interest, but the bid-ask spreads were pretty tight, all things considered. So that tells me that there are market makers standing by willing to take the other side of the trade. And so we have, or you guys have, you put it in the report that you have like a 4 to 6 month time frame on this trade that you think if it continues breaking out, that this stock could trade up into the 60s, right? Is that the price target you guys had?
Yeah, about 64.50, 64 for, 64 and change.
Right.
And
So I'm sorry, go ahead.
if the options work, right, they're $5 out of the money right now. If they work, you would imagine some volume probably comes in, open interest would increase, and it would probably be easier to manage and get out of. We have 6 months, 7 months.
Yeah, I mean, you're kind of hitting on a point that I mentioned when we were talking this morning. I said, look, the bid-ask spread on the June 50 calls, which is the strike that I wanted to get into, their bids at the time, they were bid 60 cents, offered 80 cents. And my argument was, look, if we just hit the offer here and pay the 80 cents, which I don't like to do that. I never like to pay the offer, but let's just say I go ahead and pay the offer and buy them for 80 cents. If these 50 calls, or if this stock goes up to 60 bucks, those 50 calls are going to be worth at least $10. There's going to be a lot of room for some sloppy execution in a trade like that. And that's okay. And so my thinking was, all right, let's just buy the offer here with the assumption that if the trade doesn't work out, then it's very likely that the only way we're getting out is hitting the bid, and the bid's probably going to be pretty low. So just assume you're going to lose everything, right? And anything more than zero will be, a quote unquote win, but winning when you're losing, I don't know if that's winning, but really we're just like, it's kind of like we're either going to win on this thing or we're not. That's really it, right? It's a binary kind of outcome.
No, I like it. And it's really, what you're betting on is very clear in this situation, right? We have about 7 months. And in my opinion, that's not much premium to pay. So we're only going $5, out of the money. And we're getting all the way out to June of next year. Gives you a lot of time. The stock was at $15 last year. It's at $45 today. So this thing can move when it moves.
Right. And you had mentioned that, I mean, the stock has had an incredible run off the, coronavirus pandemic lows, like many stocks. That's not unique. But even considering the run that it's made, when you look at the chart that we've got here, if you want to go back to that chart, I mean, the simple fact of the matter is that now finally, after 3 years or so, we're breaking out to new all-time highs. And that is meaningful. I mean, yeah, where it's come from over the last 18 months is pretty damn impressive. And some people might think, oh, well, it's due for a pullback. But we look at this chart completely different. We think it's just now getting started.
It's gone sideways all year. So there's a lot of pent up demand there.
Yeah.
Why shouldn't it make another leg higher here?
Well, Straza, another great find in the minor leaguers report. Thanks for putting that together. I'm pretty excited about this trade. And like I said, it's either going to win or it's not. And there's really no in between on this thing. I don't even have a risk management level on this trade because if it doesn't work, I'm going to assume it's going to be a zero, and that's fine. But if it wins, it's going to be a nice win. And as always, when I buy long calls, which by the way, just a reminder, we bought the June 50 calls. We paid 80 cents for them. Last I checked, they've been bid up a little bit more. No surprise, some volume has come in since we started talking about it. But the plan is, if I could sell half of my position at $1.60, which would be double what I paid for it, I'll do that. What's that? Oh yeah, I'll do that, and then I'll have a free ride because then I'll have all my risk off the table, and then we'll just let Main Street go, and we'll keep enjoying our stroll down Main Street wearing our big boy boomer pants, right?
I'm a fan. I like this trade. I like my binary options. So.
All right, I'm going to bring the music back on, and we're going to sign off here, everybody. Thanks for hanging out with us, and well, we'll see you on the flip side. Thanks, everybody.
Later.